Hello, everybody. Chad Lubin, Cross Country Mortgage. Thank you for pre-approved buyers that watch this video. Thank you to all my realtor partners and past clients that watch this video. This is your weekly market update. It's Fed Day. 0.75% rate hike is expected. We'll see what they come out with. Don't worry, that doesn't mean interest rates are going up by another 0.75%. That expectation is already baked into the market. So what's that mean? That means if they decrease less and surprise the markets, you'll probably see mortgage rates get better. If they go higher than 0.75%, that's a bad sign because they don't think inflation is getting contained yet. You'll see mortgage rates get worse. If you see 0.75% increase, things will stay the same, and then it will go into what their notes are. So they typically talk about the next steps. This is the last Fed meeting of the year, but they'll forecast for the January Fed meeting, and if there's expectations to continue to increase. If they talk about pausing a little bit, if they talk about there's some good signs out there, you'll also see mortgage rates improve. So fingers crossed for a good report. The most important report of the month comes out next week. That is on the 10th. That's Consumer Price Index report. We also have a big jobs report due out. So it's been a very volatile week for interest rates, mostly for the better. So let me share my screen with you. There we go. So this is mortgage bond trading. Sorry if I look down a little bit, but I'm looking at this chart. So the highest interest rates in the last really 15 years. We came close to this in 2017, beginning of 2018. But the highest rates in about the last 15 years happened on October 21st. We touched it on October 13th, and we've had a really good rally. Remember on this chart, the higher the mortgage bond trading, the lower the mortgage rate. So we did some locks here. You can see what that triangle represents. That was really good for our clients. We locked yesterday ahead of this report, and then look today. They're below. This is called the 25-day moving average. It's been a battlefield. We'll pop above it, then we'll pull back below it. So we can, until we can convincingly close above it, we're in a locking bias because you can see there's a long way to fall, which means way higher rates. So we've seen interest rates improve about 0.3% to 0.5% this week. So here's the truth. CoreLogic came out, and we have 11% appreciation year over year. That's September 2021 to September 2022. Yes, that's down a little bit from this year, but here's what was very interesting in their report. They moved their forecasted appreciation from September 2022 to September 2023 from 3.2% nationally to 3.9%. That's due to the low inventory. So listen, I know there's less demand out there. It's not as crazy it's been. We're back to a normal market, but the inventory is still tight. So when they say, hey, we believe real estate's going to keep rising, it's just a great investment. I just bought another property for myself, a dream vacation home that I'll Airbnb out, and my wife and I will retire in someday. I leveraged it all. I'll get a great rate of return. I don't judge things financially off of short-term decisions. I look at the long-term, and real estate is a great, great investment. So their forecast changed. I think this is the time to get in a home if you're a buyer. You can negotiate the price a little bit. You can get some credits. If the appraisal comes in low, you have some negotiating. We haven't seen this for 2.5 years. So I know the mortgage rates are working against you. That's temporary. We're hearing anywhere from rates to settle next year from 4.5 to 5.5. And on this chart, they touch 7.5. Right in this range. So here's the truth. This is a great time to buy. You should be negotiating. You should be out looking. You shouldn't be putting the pause on your search. Gosh, unless you're just going to stay put in your home and you bought pre-2019 and you got a great deal and you got a wicked low interest rate. If you're moving down as a buyer, then it's a great time to hold pat. if you're a move up buyer, this is the time to buy. When your price is higher, you should go after the best market. I think this is the best market I've seen since 2018 to negotiate price. So I'm a buyer of real estate right now. Might be wrong, but guess what? I'll hold on to the properties until I'm not wrong. I've owned many investment properties. I've had properties that I owned and moved out of and then rented out. And I just sold at the right time, and they've always broke even or made me a ton of money. Somewhere in there, I've never lost money in real estate. So keep on your search. We're here to support it. Call us if you have any questions, 312-731-4939. Chad Lubin, Cross Country Mortgage, 312-731-4939.